If I haven't met you yet, my name is Lisa Spencer, and I'm a broker associate here. And all those letters after my name say that I've been a realtor for a long time, for the past 30 years. And I love learning about real estate. And those little badges at the bottom say I love sharing that knowledge with others. So hopefully today we're here to learn some things about Condos 101. And it's about navigating this new dynamic world of condo sales in Florida. There's been some significant changes in the past couple of years, and even if you're not new to real estate, you might be new to the new condo process. So let's start with the question. Which one of these is a condo? And if you take a minute, you'll see that we have 3 different types of construction here, and the trick is all of them are condos. The one that's usually most confusing is the one on the left. Townhomes can often be misinterpreted as condo when they're fee simple, or the reverse. Sometimes people think they're fee simple when they're actually a condo. Well, it's not about construction. It's about ownership. So when you're looking at any of these buildings, it's about ownership, not construction. So what are the 4 types of ownership? There are 4 types of ownership, and they are fee simple. That means you own everything, including the land, and hopefully sometimes the mineral rights under that land, sometimes not. Of course, you have to check the deed. So if it is not fee simple, then it is condominium ownership. Condominium means that you own the 4 walls and in, and you also own an undivided interest in the amenities and the roof and the elevator and the parking lot, which means you'll have some responsibility, your proportionate share, in maintaining those. The other type of ownership is co-op. In a co-op, you don't own any real estate. You actually own a stock certificate in the corporation that owns that real estate. And that's a whole different ballgame that we're not going to go into today. But just know, sometimes it'll look like a condo, and it actually is a co-op. So if you look in the deed and it says co-op, it's going to be a whole different approach. Then there's condotel. This is becoming more and more popular, especially in South Florida, where they're converting a lot of hotels and motels into condotels. What that means is that you'll be responsible for renting out your unit, especially in peak season, but you'll own the unit, and the management company will take a cut, and you'll get compensation for people that are renting your unit. So we're going to just focus on condos for today, but it's important to know that there are 4 types of ownership. So let's first start with explaining a condo purchase to a buyer. Our great resource for everyone is floridarealtors.org. If you haven't been there yet, please go and just type in condo in the search bar. You'll get a lot of useful information. But my favorite is this infographic, 20 questions to ask when buying a condo. You can use this and post it on your social media, and it helps you improve your image with consumers as someone who can help them with condos. It's also a great thing to include in your buyer consultation, because we're all looking for new ways to show value in our consultation, and this is a great one. Then we're going to use a slide that helps explain to consumers the difference between what happens when they purchase a fee simple property and what happens when they purchase a condo. When someone purchases a fee simple property, they have to qualify. We explain to them, you have to come up with a down payment, you'll need to have a credit score that's credit worthy, and you'll need to have a debt to income ratio that allows you to purchase the home with whoever's financing you. The second thing is the property has to qualify. So you're going to do a home inspection and make sure the home doesn't have any defects that you're unaware of. You're going to have an appraisal done where the lender's going to be sure that the property actually qualifies for the amount of money that they're lending on it. And then you have to have insurance. So this insurance would be your homeowner's insurance and also flood insurance if that's necessary. When you purchase a condo, a whole new element enters into the transaction, and that means that the association has to qualify. So those first 2 qualifications absolutely have to happen, and then there's this third element. Now, one of the other things when they purchase a condo, there's additional closing costs because they're going to have to pay for estoppel letters, they're going to have to pay for a condo questionnaire to be filled out for their lender, And there also is a difference in what price they qualify for because the maintenance fees and association dues all have to be incorporated in that debt ratio. So sometimes someone purchasing a condo for 400 could afford a simple fee simple single family home for 450,000. So we'd want to make sure that we make these adjustments with whatever lender you're working with before you get out there and have a consumer fall in love with a condo that they can't afford because they didn't incorporate the fees. These are the main roadblocks for financing, and you'll see there's 8 of them here. The first is only for investors. When you're working with an investor, investor concentration becomes important, and there can't be more than 50% rentals in a project that an investor is looking to get financing for. The other thing is single entity owners. They don't want to see any one entity own more than 20%. They don't want to see commercial space exceeding 35%. We see a lot of new construction popping up where we are including commercial space where you live, eat, work, play all in the same place. We want to make sure that the commercial space doesn't exceed 35% of the total project. They don't like to see delinquency in maintenance fees. So in a project, we can't have any more than 15% of the total units that are 60 days or more in behind in their maintenance fees. Litigation, well, this you're going to have to talk to your lender specifically about, but basically litigation is never a good thing. So if there's litigation involved, sometimes it's something that can qualify, but if it's that the balconies are falling off and they're suing the builder, likely you're not going to get financing. A recreational lease or land lease, this is not as common, but if there is a golf course or tennis club or pickleball, they want to make sure that those amenities are also owned by the association. Lack of reserves in the budget is also a big problem. So when you get a financial statement, especially if one is posted in the MLS, make sure they have 10% of the annual collected monies in reserve. That means if a complex has collected $1 million in maintenance fees, there should be at least $100,000 in reserves, that 10%. And they want to see adequate insurance coverage. And this is becoming a really big issue today because we all know in Florida, insurance is a main hot topic. And some of the associations have tried to solve their insurance woes by raising deductibles to an unreasonable amount or even, God forbid, self-insuring. So we want to make sure that we have all of these 8 topics, at least you know what questions to ask. Another resource, as I said, is floridarealtors.org. And one of the reasons all of these things have become so important is because Fannie Mae and Freddie Mac have discovered they are holding a huge bag of snakes. They are financing over 70% of the condos nationwide, and 70% of those are older than 30 years old. And the collapse in Surfside brought to the fore that they could be having huge risk out there in the future. And so some of the new rules that we're about to talk about were brought about because they need to tighten up the maintenance of these condo buildings and projects. So let's talk about explaining the condo sale process to sellers. Now, some sellers purchase their units during the foreclosure wave, and some of them close on their units without a lot of information, but that's not going to happen today. So we may be in a little bit of a funny situation with a seller where they say, well, I had to figure it all out myself. Well, that's just not going to fly anymore because there are some regulations around what a seller has to provide. You're going to include a condo rider. You're going to be using the FAR bar or the FAR bar as-is contract, and that requires the use of a comprehensive condominium rider if you're going to be selling a condominium. And you'll see item number 1 is one place where we want to make sure we keep both sellers and buyers informed. Even though a buyer may qualify for a loan with a lender, sometimes a condo complex will require a higher credit score than what the lender does. And when that happens, we have to be sure that the buyer is aware that they do have to go through a second approval process. You'll also notice the item that is checked A or B. This area discusses whether the buyer has all the information that's required ahead of writing their offer, or if you select B, it means that they don't have everything right now and you're waiting for it to catch up. What is dangerous about this is if we don't have item A checked and we're going to wait for items to come in from association and property managers, then there's always this risk that your seller will be way down the road of thinking their condo is sold and then find out that the buyer found out something from these disclosures that they didn't like. At any point when they get these disclosures, they have 3 days to cancel the contract without penalty. Item number 10 on the rider is the one that has changed the most significantly. It always included the condo governance form, even though a lot of people like to ignore it. And now it includes the milestone inspection report and also a structural engineer reserve study if it's determined that that's necessary from the milestone inspection summary. So let's break these down one at a time. The governance form is actually something that looks like this, and you can find it on floridarealtors.org in Form Simplicity. Also, you may be able to find it in .loop. This document actually details which item has to be covered by the buyer and which item has to be covered by the seller. The seller is responsible for providing financials and other necessary documents for a buyer to make an informed choice. The second thing is the milestone report. So what is a milestone report? A milestone inspection is a structural inspection of the building, the load-bearing walls, and the primary structural systems. It does not replace a home inspection. Anyone purchasing a condo should absolutely still do a home inspection for their particular unit. The milestone inspection simply is a structural inspection of the building for its structural integrity. It's required when a building is 3 stories or more. So if it's a 2-story condo, none of these things have to be performed. But anything 3 stories and above that is 30 years of age, if it is outside of the 3-mile area of the coastline, if it's 3 miles or less to the coastline, then it's 25 years, and then every 10 years thereafter. So notice that if a building was built before July of 1992, that building has its inspection due by the end of this year. And lastly, we move to the Structural Integrity Reserve Study. So the Structural Integrity Reserve Study is something that is a follow-up to that milestone inspection. If the milestone revealed that there are things that need to be improved and repaired, then a study has to be done as to what it will cost to make all of the required repairs. And those monies must be set aside in reserve in addition to that 10% that we already had. So let's talk about what happens from contract to close. First, we need to know about insurance. Insurance is very dicey when it comes to condos, and your lender is always going to ask for the master insurance policy. This master policy will let them know whether the buyer can qualify for an HO6 policy, which is just a walls-in policy, or whether they have to have additional insurance because the main master policy is not covering them adequately. And then also there's something called fidelity insurance. If there are more than 20 units, then the association has to carry what I call bad bookkeeper insurance. They have to carry a 3 months maintenance fees in an insurance policy in case there's any incidents of embezzlement or other nefarious activities with the bookkeeping. So condo, contract to close. Here's a quick checklist. First, you always want to do a thorough buyer or listing consultation, and you can use some of the slides in this presentation to help explain things to people. Even as a listing agent, you want to make immediate contact with the lender to ensure that they have experience with the condo sale process. I personally worked with a lender who had a condo help desk, and that was super helpful. The seller should have provided the association financials. Go right to that line and check for reserves, because if it's less than 10%, that's going to be a hard stop for most lenders. Order and conduct the home inspection as soon as possible before the buyer has to pay for additional fees for condo questionnaires and other things, and they only find out that, the condo isn't in as good as condition as they thought it was through a home inspection. Also, and lastly, follow up, and follow up with the lender, with the property management company, with the title company, and with the cooperating agent. You want to make sure that condo questionnaire is being filled out. You want to make sure that master insurance declaration page got to the proper people. And then also estoppel document. When were they ordered and were they received? How many closings we've seen that are delayed because estoppels are forgotten to be ordered. So as an agent, you have to stay on top of this, especially when you're working in the condo arena. This QR code that will take you to my website. On the website, you go to the buyer experience and then purchasing a condo in Florida, and you can get all the slides that were in the presentation today. Thank you so much for your time. I hope you enjoyed and were informed by the things we talked about today, and I look forward to meeting you in person very soon.